Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 20th of August. Starting off with Avacta, where it's hopefully second time lucky for the bulls. There was some support for the shares in the around the 120 area. That was level with the late January floor, but there was one more leg down to come and testing, I suppose, that support line there from April last year and that old low there at 90 pence. The low this time around at 97, so a decent higher low there for the shares, and also breaking that June resistance line around £1.10. The longer we stay above that, the greater the chance of at least a flip back towards July resistance around £1.44. So something to shoot for there for fans of that particular situation. On to Canadian overseas, which has had its first week back from its adventures in the M&A world. Here we've got the situation where it's so far bouncing at or just around the old suspension high there, around 0.38 through 0.39. So that's quite good. It also looks as though we're still holding the floor of that rising trend channel from May last year, which is around sort of 0.37, 0.8, 0.38 level. So still a bull argument intact, and it remains intact really while we hold above the 200-day line at 0.33, but ideally we don't go below the high 0.3s, let's say. I suppose if you're looking for a decent signal or a momentum signal now, probably 0.42, 0.43 on an end-of-day close basis would do it. While we're above the high 30s, looking for 0.8 over the next couple of months maybe, which is the top of that rising May 2020 price channel. So let's see how we go with that one. A stock where my charting's been mentioned on social media, which is always quite flattering, Global Petroleum. And the situation here is still interesting. We had a bull trap through the 200-day line the other week, a couple of weeks ago, and gapping down. But the gap down actually found support above the 50-day moving average, which is always a positive. And we've had support above that 50-day line at 0.47 all the while. The view at this stage is at least while we hold above that 50-day line, we're looking for the 200-day line again at 0.7, maybe over the next couple of weeks, and then longer target maybe by the end of next month up to a penny if all goes well. Ideally, though, today we see an end-of-day close back above the top of that gap at 0.58. That would really help the cause either today or early next week. A gap close signal tends to be a good and a strong one. Speaking of gaps, we've had those all over the place with Helium One in the recent past, but the stock building well on the gap through the 200-day moving average yesterday. That's at 13 pence. And the longer we remain above that, the greater the chance of a move back towards old support on the way down, or back in July at 22 pence. That's also the level of the 50-day moving average around 22.3. So what would seal the deal perhaps in terms of confidence is an end-of-day close back above the high of earlier in this month, the bottom of the gap at 16 and a half pence plus. So that would do the trick. So 16, above 16 and a half, looking for 22 near term for Helium One, perhaps by the end of this month. Novacyt actually came up with the goods. Looked like 414 pence was a long way away when we were in the 330s, but we managed to break higher, building on that gap that we had earlier in the week and clearing 414 pence, which was our initial target there. End of day close above 414 could take us up to a new leg around 480, which is the top of that broadening triangle from back in May. Moving along to a stock which has been rather in the wars of late, but just looks as though there's first signs of recovery. And the reason I say that because the chart here looks remarkably similar to that of remote monitor systems, which we'll look at in a minute. It looks as though we've got the shares bouncing off the floor of a falling trend channel there around 19 pence. And while we're above 19, looking towards the top of the channel there at 25 pence, maybe over the next 2 or 3 weeks. The volume there coming in quite well. The green bars there over the last few sessions. So that does suggest there's been a bit of a change in sentiment towards the stock. Let's see if the volume works as a signal. Moving along to the stock I just mentioned, remote monitor systems, where there were nasty accusations made about my view on the shares or my angle on the shares, but it was all about the charting, and we actually bounced off the support line there from May. That the lows there around what was that, 0.57 or so. Gap down to start the week, and then a gap higher to end the week, which is very impressive. We can close above the top of that gap at 0.82, then there could be a follow-on move, maybe to even retest as high as the 1.5 pence area, which was the main post-May resistance for the shares. Seems quite ambitious, but that island reversal, bear trap island reversal as well, very impressive. I suppose at this stage, anybody back below the old 0.7 pence level, which was the last low in July, really delaying or questioning the recovery argument for RMS. But as I said, a bear trap gap reversal is a strong charting signal. I want to just cover Tirupati, which had a bit of a wobble during the week, but it looks like it's still holding that uptrend line there from back in December. That's roughly level with 108 and above 108, looking towards the 50-day moving average again at £1.25. It would be nice to get an end of day close back above the bottom of that gap at 111 today. We've also held the gap that we had higher in June, so the shares still looking decent with a rising 200-day moving average as well. So £1.25 doesn't look too ambitious on that. Stock which I missed out looking at earlier in the week is ValiRx, but here it is today. Again, another chart which looks a bit like the RMS and RMM charts, but here we've had a little signal here, which some of you may or may not have spotted. That's a gap close there, so we gapped down and we closed above that on Tuesday around the 19 pence level, and that gave us a good signal to go long on a technical basis. Also broken above the 50 and 200-day moving averages, the 200-day line at 21.5, and above the 200-day line, looking for at least a retest of the June resistance around 25, and best case scenario target maybe over the next couple of months up to 38 pence, which is a February resistance line projection. That's it from me today. More updates over the weekend.